don't panic. You have a great opportunity right now to definitely translate to be able to build that wealth. You want to become a millionaire. You are about to have that opportunity with the way that the market is going. We see there's a lot of downturns, there's a lot of uncertainties, there's a lot of laws that's going on. Hustle, 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 step. Move, and make it back. First we gotta hustle, hustle, so we get the cash. There's a lot of things impacting the economy. So some indicators that you have to pay attention to. One is the copper index. I remember I was doing some electrical work, and 250 feet wire cable Romex was costing about $60-$70 when I initially was doing that project. And about a year, less than a year later, I didn't get enough, and I needed to get a couple more rolls. And it now was about $200 in order for me to get that same amount of roll. That's like almost three times the cost in a short amount of time span. The copper index was $4.50 at its peak when it was super high. It's now relaxed around the $3.50 range, meaning that there is either less demand or there's more supply and availability. So when that happens, it creates a much more rebalance of where it is. When demand and supply can meet each other is when things are much more normalized in so many different ways. Lumber, same thing, has taken a reduction. It's not as high as it used to be. The other thing you want to pay attention to is the gas price. Even though the gas prices, it is impacted by the war with Russia, Ukraine, all that stuff that's going on. There's other things in the world that's going on too, but these are the things that the news kind of make much more apparent, which is why you want to step out, get educated, and reach out to different resources to see if you can learn what's going on with other markets as well. But that is one of the driving indicator when it comes to gas prices. I don't think it's solely based upon the fact that we are in a recession. And by the way, we are in a recession. Just have to point it out there. The reason is we see a lot of layoffs is happening. There are a lot of shifts going on within organizations, hiring freeze. I'm seeing that amongst the big techs, Microsoft, Facebook, Google. They're either laying off, resigning offers, which makes no sense. You should be budgeting for these things years out ahead. You can't tell people that I'm offering you this gig and then right on the start day, you just say, we're no longer having you start. That's just unfair. It makes no sense. You should be budgeting. Whoever your CFO is, whoever is handling the finances at that point, you guys should all pretty much be the ones that should be fired, because you should have budgeted for all these things ahead of time in case the worst happens, you're able to handle it. Don't just hire people just for the sake of hiring. You have to hire people at the sake of a need, a necessity. It doesn't make sense. But all these things are happening because of so-called fear. But I feel a lot of it is politics as well. There's a lot of government play in when it comes to these companies making these decisions, that they get influence. And they may have the budget, they may have the money, but still decide to do that. But it's so unfair that it's at the cost of regular people that are actually working, needing jobs. It's very unfair. But that's another indicator that I definitely want to make sure that you're paying attention to. See which companies are doing the firing and which are doing like more hiring. Right now, the big banks, I'm not seeing that they're impacted. So those are your Goldman Sachs, Morgan Stanley, JP Morgan, as much. The only side I think that may be impacted are people that are maybe doing lending, because there may be a slowdown in terms of lending with the interest rates reaching higher. So that's another factor you have to pay attention to too, because with interest rates going higher, the reason that they're doing that is they can slow down the economy. They can slow down people from purchasing. That it's going to cost people more money to do purchases, which the market can react in two different ways. One, it's either they're reducing purchase price. So that goes for homes, cars, or people just completely stop buying. Because if the interest rates is doubled, prices would have to halve. And then you have an equilibrium where the fact that the interest rates went up, it doesn't matter. The demand can still remain the same. But it has to be that the prices stay the same, interest rates stay high, then you'll have that slowdown effect that's happening. And they're going to get to a point where they're doing it much more aggressively. We don't know when they're going to do the next hike. So we know like home interest rates right now is almost at 6%. Another indicator. And what's happening with home prices, which I'll be doing another video when it comes to like home inventory and such, we're not seeing the super impact right away immediately. It might take its time, and I'll be covering more of that in another video where I'm elaborating how to actually observe and analyze what's going on with the housing market, because I also want to be able to enter back in and find a buying opportunity, whether it's commercial, residential, to step into some investment that may go on. So these indicators you have to pay attention to when it comes to the stock prices. Like stock prices, the relevancy to many people is if a company is doing well, the prices are going to go up because more people or have more interest. They feel like the company's going to keep doing well, and because they have a fear of missing out, because other investors will see that and they want to pump more money into the company. Before that happens, investor A would most likely put money into the market because they think that investor B, C, D will put money because the price of the stock is going to go up because the company is going to do well. It's all based upon fear, emotions, and feelings. If pretty much none of these investors pay attention to each other, they all left their money into a particular company, regardless how bad and good it is doing, the price would stay at a normal pace. The stock market doesn't really have a correlation to how well the company is doing directly. It's just with investors' emotions and their feelings involved, it does. That's why we see prices fluctuate. And right now, the overall market is not doing super great. The Dow is around the 32,000, and we see that the NASDAQ is around the 12,000 range. So, at its peak, the Dow was at 36. The NASDAQ was around 16,000. I've been buying in slowly. I know a few weeks back, I released a video where I wasn't going to put as much. I did buy like Litecoin Trust, Bitcoin Cash Trust, which from the prices I bought them, I'm in profit zone for the prices that I bought them right now. However, I didn't go as super aggressive. I did put in some, not as much, a few thousands. Aggressive for me would be like going in 5-10 grand in all at one time, but I did put like a few thousand in. So my strategy when it comes to that right now is I'm paying attention to individual stocks and not just the overall market. So TDOC had their report earnings and they missed the boat, and their stock price fell all the way to like $35. For me, that's a buying opportunity. So I did buy more shares, not crazy amount, about 15 shares inside of my regular like Robinhood account. Fluidigm, which is now Standard BioTools, their symbol is now Lab. I bought more because for me the buying point was under $1.50, and it hit that a couple of times. So I definitely bought in another 1,000 shares underneath that price. What would be aggressive for me if it hit to like $1.25? I would definitely be buying like few more thousand shares. But I already have a lot of that, and I had bought this stock since 2020, COVID. That was where a majority of my stock holdings was being held, and it peaked to like $15 during like market hours and $20 during off market hours. So it has a huge upside. And they also have a cash injection of $250 million that went into play like earlier this year. It's a transition process. We don't know when that's going to be complete and what's the full plan to evolve. But that's another one that I inject money into. Litecoin Trust, Bitcoin Cash Trust, all the Grayscale stocks, I still think right now is a good buying power. So the thing with crypto is it doesn't quite have a strong correlation as stocks do, because there's no news about Litecoin, Ethereum, Bitcoin when it comes to how they're impacting the market. Those are more currencies that are being utilized, and there are also technologies that are being utilized. The NFT market is a huge marketplace, and some of these coins are being used in those markets, like Ethereum, Solana. There's Mana if you're buying land and things like that. So those are where these coins can actually see some impact, and people are trading the currencies to do like certain NFT transactions, but they're not treated the same way. Yes, the economy does have an impact on it. Like when we see that the war was happening, right? People were utilizing Bitcoin to send money back and forth. I personally feel this is a disguise. When it comes to the whole Ukraine-Russia war thing, it's a disguise. Yes, people of Ukraine were impacted, and it's unfortunate that at government greed, political greed, that normal people have to get impacted and suffer through all that. It's just unfair. But I do not think Ukraine has the worst of all troubles. There's so many countries in Africa that are going through things, and this is not me discrediting what's going down in the Ukraine, but I think it's being utilized as a political move to disguise something that the government is doing behind the scenes. And I don't want to just sit there and say Putin is a bad guy and all this stuff, because there's the other side of it where he was bullied to the point where he has right to get to that point where he's initiating the war, and he said, I want to stop it. And I've seen a lot of companies that are just saying, I'm sanctioning Russia, I'm sanctioning Russia. To me, it's a little bit unfair. You're just playing a political game that, you're trying to get some gain out of it. It's just like a whole media stunt. I'm not buying into it. That's why I say always do your due diligence and research. I do feel that Ukraine does need support, things like that, but there are other countries as well who need support as well. They're not going through, I feel, the worst of the worst compared to the rest of the world. There's Syria, there's other countries that are going through worse, that's been going through things from way before. But that's like my own opinion. But back to the market and how that kind of impacts it. When the war, I think, starts to die down and we start seeing more of communication amongst the countries and things like that, that's another indicator you want to pay attention to in terms of, all right, now we have to start putting a little bit more money into the market. If the market is down still, if it's like further up, then I would say wait a little bit and see what happens. But waiting does not mean you completely stay at a standstill. You can still inject money weekly. Right now, if you're injecting money on a weekly basis, monthly basis, whatever is recurring that you can do, it's completely fine. You are going to see that upside. You are going to see the gains over time because we are down from where we're supposed to be. Like right now, we're not supposed to be at the 32,000, but because of where the economy is, the market is at where it's at. When it comes to the down, the Nasdaq being at 12,000. We've seen these all-time highs happening, but a lot of companies are hitting some break points where they're not receiving as much cash flow. They're not performing as well due to the state of the economy, which is normal. Things have to rebalance. People have to suffer for a little bit before the light comes, before the sun shines. It has to rain a little bit before the sun shines. So don't think these days are going to last forever. Stay persistent. Putting a little bit here and there is completely fine. But for me, I am doing the same. I'm paying attention to individual stocks. But when I'm going to go heavy is pretty much when I see that bloody day happen amongst the stocks and crypto side. And the amount that I'm saving now is when I'm really going to go in. I did buy, though, some virtual land inside of Decentraland. The reason I did that, I don't think that is impacted too much by the economy. Although I had to use Ethereum, I purchased Ethereum on Robinhood, and from my Robinhood wallet, sent that over to my MetaMask wallet, and then do the transaction on OpenSea. So now in Decentraland, I bought the land purchase. But I converted the currency right away. From the price I bought it over, which is like 4 or 5 days ago, to what it is now, Ethereum has dropped. But the currency for me is not in Ethereum. The land is the value, right? The land itself versus the currency is too different. I can price up my land to make up for it. And that's the beautiful thing, is that what I'm seeing about virtual land, it works very similar to real estate. You can set your own prices. You're not dependent upon whatever Ethereum's prices, Mana's prices, or Bitcoin's prices. If the price of Ethereum drop, you can ask for more Ethereum to make up for it. You can ask for whatever you want once you own the land. It's much more of like a supply and demand thing, which is separate. So that's another thing I think you should look into. I think the average land last year when it reached its peak was like around 11, 12,000. So I purchased mines under 5,000. So there's at least a 2x upside for me. That's the other reason why I purchased it now. But I'm holding on to it. I do plan on building things on top of it because I have a very interest in terms of what I can do. This reminds me of like Sims, where you're able to actually build your own kind of fortress, your house and things like that. So I'm very excited about doing that. There's so much to it that I don't know. And I feel like the fact that you stepping into it is how you're able to figure out exactly what to do. So those are some of the strategies that I've done. Didn't buy too many stocks, didn't buy too many crypto. However, for the next dip, right now we are seeing like a little rally. I don't have the fear of missing out. Don't feel that you have to fear of missing out. Hold on to your strategy, hold on to your target buying price, whatever that is, and just kind of hold out. But always have a majority, of course, of what you want to invest in inside of the market. Don't pull all that out and then try to find. That's when I think you stretch yourself out. You don't need to do that. The biggest gains is usually typically from that strategy. And plus, two, remember the tax periods, right? If you hold on to a fund or any investment for a year plus, you tax differently than doing the 6 month thing. So if you're buying and selling consistently, you're being taxed much more heavily. So those are the factors that you really have to pay attention to. But I hope this was informative to you. I just wanted to give a quick market update. I didn't do too many stock purchases, but T-Doc had dropped. I did some purchase on that. So did Lab. I did more purchase on that. And I also bought a piece of parcel on Decentraland to see how it goes. So see you next time. Peace. If you have any questions, any comments, or want to share any type of investment strategies that you're implementing, I'd love to learn about it. I think that's how we build and grow, is that we continue to share amongst each other. So peace.